Good day. Thank you for joining me. My name is Matt. I cover IT stocks for PSG Wealth. Intel is one of them. In this video, I'm going to discuss our most recent report, which looks at two major events that took place in February. So these events are the Tower Semiconductor acquisition, the Investor Day update, and then I'll also chat about our valuation on Intel. We've got an intrinsic value of $60 per share, which is about 25% upside from current levels, and we've got a buy recommendation. So in mid-February, Intel announced that it was acquiring Tower Semiconductor in an all-cash deal. The deal is about $5.4 billion and includes paying cash of about $53 per share for Tower Semiconductors. What does Tower do? They make analog semiconductors. Analog semiconductors are slightly different to digital semiconductors, so let me explain the difference. Digital semiconductors process binary information, so that's ones and zeros or ons and offs, and then analog semiconductors process gradations. So these chips can process waveforms like speech, music, sound, temperature, speed. The deal is quite small in terms of size. It's only about 3% of Intel's market cap. They've got $29 billion in cash, that's Intel. And this is a great deal in that it helps Intel achieve its IDM 2.0 strategy to become a major provider of foundry capacity globally. Tower Semiconductor is a foundry, so it offers products based on the design specifications of its customers as opposed to providing its own products. And Intel now gets to leverage off all of Tower's IP and R&D in its own foundry service. The second event is the Investor Day, which took place a couple of days after the Tower announcement. The main takeaways from the Investor Day were that they are delaying a generation of server chip called Granite Rapids from 2023 to 2024, and the pushback was so that it can be manufactured on a more advanced process node. They also included a full FY22 outlook, which mostly beat expectations, and they also provided a longer-term growth profile, which indicated accelerating growth, increasing margins over the next couple of years. So what we've seen so far this year with Intel is that it's been a lot less volatile than some of the other big tech stocks. However, year to date, it's down nearly 6%, and it has underperformed the benchmark by nearly 1%. This performance is actually quite a lot better than some of the industry peers and big tech names. It's had a couple of big days this year. By big, I mean more than 3%, and most of that has been on company-specific news. On the Investor Day update, it fell 6%, but a couple of days ago, it also gained 7% on rumors that it might make chips for Nvidia. It's still early days, but this is a long-term call. Our sum of the parts valuation values the core of Intel's business at an EV sales multiple based on its 5-year average. Given that Intel's got new management, they've got a goal of repositioning themselves as a leader in the industry, which includes becoming a major foundry player. They've got a strategy to increase manufacturing capacity outside of Asia, and they are likely to receive government support. So we think Intel should at least trade at the same multiple as it has in the last 5 years. For Tower Semiconductors, we value that at what its average EV sales is, but we apply a 10% premium to account for potential synergies between Tower and Intel. We've got an asymmetric risk profile as shown in the graph in the slide. Our intrinsic value is $60 and we have a buy recommendation. If you would like to place a trade, please speak to your financial advisor or contact our dealing desk. Additionally, you can find the report on Intel on MyBase. Please take note of the following disclaimer before we end off. Thank you.